use the MT5 interfaces on your phone, right? So I have to host the class with Telegram because Zoom would not permit recording on phone. And for the people that would like to go over the recording again, so putting them into consideration, it's just better we'll do to this class on Telegram. Although when you're watching the recorded video, I think you would face a bit of challenges, which is the reoccurring Telegram watermark. But then it's not something that would prevent you from getting the whole concept or the whole value of watching the recorded video. All right. So welcome back again. Now, somebody on the suggestion subtopic asked me to fund a smaller amount. So for today's class, we're going to be particularizing using a $20 account size. Okay. For those of you raising your hand to speak, I don't know. Do you have something to say? If you don't, you can just put it down. All right. So going to MT5, which is this. This is my MT5 interface. I already taught you guys how to navigate the MT5 interface, starting from when even before the whole Sampon classes started, right? You already treated how to use the interface, how to open trades, how to do this and this. But then coming in terms of synthetics now, this is not going to be stacking on its own. Remember that when we started stacking, I told you that how do you stack? You're stacking in 50% of price leg, that's discount when you're buying and premium when you're selling. But then the stacking, if you're going to be waiting for a pullback or if you're just stacking continuously, it's going to depend on the closure of the both candlesticks. If they close significantly apart, you'll be waiting for what price to come back to mitigate it before you stack. But then if they close at very similar levels, you'll be what? Just stacking continuously. All right. But then somebody asked a very important question where the person said, okay, when it comes to engulfing candlesticks, like your price has mitigated your entry and created what an engulfing candlestick. And then the engulfing candlestick closes like far apart. You know those rejections that are what's very sharp. Do you understand? Before they close, price has gotten to like 1:1 RR. All right. In a case like that, what do you do? Now, for something just like that, on the 30 minutes time frame, before an engulfing forms like that, you realize that those engulfings on 30 minutes or those engulfings on 1 hour can be like would have given you like a hammer confirmation on 30 minutes, all right, or a pin bar, sorry, in the case of a sell position on the 30 minutes. So whenever you're looking for this candlestick confirmation, just interchange time frames, but start from don't go below 30 minutes. All right, because if you go below 30 minutes on the 15 minutes time frame, you can find all of the candlesticks you're looking for. You understand? The lower you go, the more it comes, but the higher you go, the more compact and reasonable the charts become. All right. So looking for this confirmation, just start from 30 minutes, then 1 hour, then 2 hours, and all of that. But if on the 30 minutes you're seeing that type of a rejection, then wait for price to pull back to entry, because now you're going to be treating them as what? Two candlesticks that were significantly apart. You wait for price to come back to entry, or you now wait for another stacking point before you now start entry. Any of these can be the options. But then another question that somebody asked, all right, now the whole essence of stacking at specific points is I don't want to term it flipping, but then when you see people do like excessive numbers, that is only how they do it. Right? Because in all honesty, you can't move okay, let me not use big numbers now. You can't move $10 to like 50. Basically, the $10 the one we should 5 set up. Take profit target, you're making like $50. All right. So when you see people do like these things that look like so excessive, it's because of the fact that they are stacking at different levels. All right. And these stackings make it more risky than just growing your account. So this is me saying that even if you don't want to stack, like you don't want to do all of this anticipating candlesticks to add more positions, opening more positions to your profits and all of that, all right, you can actually grow your account the normal way, the way you do on currency. All right, at entry you wait for confirmation, you enter on confirmation, and then you have your trade running to take profit targets without waiting for all of these things. That is also another way that you can trade your synthetics or your currencies. Do you understand? But for most people, they especially like people that have like good capital, you can see them mostly just grow their accounts to normal. Most of the people you see trying to flip is just probably because of like little capital and all of that, right? So there are two ways whereby you can trade it. One is more risky, the other, of course, the stacking ones are what more risky than the just growing your account sizes. All right. So whatever works for you best, you're being taught the both of them so that you choose which of them mitigates your interest. Okay, so for today's class, we're going to be looking at these stackings and then answering a very important question. You understand that sometimes a minimum lot size, all right, you can have a setup and then your stop loss. Just to confirm, Messi, can you still hear me? Okay, who was the other person?
Yeah, Rock, I can hear you
The
clearly.
other guy, can you hear me?
Yes, please, I can hear you
All right,
clearly.
thank you. So, all right. So as I was saying, now somebody asks, you can have a setup now, and then at your stop loss on minimum lot size now, you would realize that at stop loss you're already losing, like, let's say you have a $10 account balance, and then at stop loss minimum lot size you're losing like let's say $27. What do you do in cases like that, right? That's a very important question that we're going to answer practically. And then another thing is, how do you now stack? How do you open these positions? Etc. All right. So we're going to be using let's use volatility 25S. Anything. There's a sell currently running on this volatility 25. I think it's a type B or is it type A? I just saw something like that, and it just created a stacking point. Maybe you guys can go check it out later. Volatility 25S. Before this class started, I was just looking through it. Currently at a stacking point, or currently mitigated a stacking point and still selling. Yeah, currently mitigated a stacking point and still selling. And then it's a type B type of setup. Price engagement before pulling out of the break of structure and then giving another confirmation. All right. So that's like particle type B on synthetics. Price has already, I think price created like a pin bar at entry and then came back to create an engulfing, which it just mitigated and then it's still selling. All right. So now let's use 25S for our example in this class. Now, if you go to entry, now let's say price mitigates your entry and then it has given you your confirmation candlestick. Remember that the most important part of that confirmation candlestick is that it closes above your entry in the case of a demand zone, and it closes below your entry in the case of a supply zone. You just want to see these confirmation candlesticks are just important so that you already understand that okay, there are there's a level of demand above that point that you're selling. If I don't know if maybe one of our continuous weekly sessions at the end of curriculum, we'll still be having sessions every week to catch up and to evolve as well, right? One of these, I will just tip in footprint itself, all right? So that you people can see what is going on in between these candles.
Hello, Star, we can't hear you.
I can't hear you. Star, are you here?
Can you guys hear me now?
Yes, I can hear you.
Oh. So as I was saying, I said that in one of our continuous classes, like as the curriculum goes on before the end of the entire mentorship year, right? One of the weekly sessions, I'm going to tip in footprint so that you understand how, like what happens in between these candlesticks, the orders, how these orders are being created. You would realize that is why it is important to see your confirmation candlesticks close above entry. It shows you that, okay, there's a level of demand in that zone you're buying from, people are actually buying as well. Do you understand? So you want to see that rejection close above entry, or there's a level of supply in that zone you're looking to sell from. Like there are sellers actually there that are strong enough to do what, push price back down. All right. So that is why these confirmation candlesticks are important, and that is why they should close before you actually what, go to your MT5 to look for what, for a buy or a sell position depending on the direction of the market. So let's say now you want to enter a trade on this is let me see.
Your
This is
screen.
volatility. My screen is not sharing.
Yes, you're not sharing your screen.
Oh, okay. JD, please let me call you back. Thank you. I'll call you. Please. All right, is it sharing now?
Yes, yes.
Okay, thank you. I think it just stopped again. Did it stop?
Stop. Yes, it stopped.
I think the network is getting terrible again. Is it sharing now? Shabi, you can see my screen.
Yes, I can still see it.
Okay. So back to our analysis. Now you've done your analysis, and then you come to MT5. Let's say now for a pair like VIX25, I already gave you guys the minimum lot size and all of that, and all of that. But if you want to get it for yourself, just come to details. You can see when you tap on any pair on the MT5 interface, you can see trade, chart, details, statistics. So when you come to details, you'd find most of the details that you would need for what, for a pair. And then if you look at minimal volume, that is what the minimum lot size that you can use on that pair. And for this particular pair, it is what, 0.005. And then the maximum volume is what, the maximum lot size you can use on that pair. And for this, it is what, 2. For a pair like this now, if you're going to be opening positions, your first instinct, depending on your account size, is to try out the minimum lot size to see how much you're losing at first. Let's say we have a position that our stop loss, let's say a sell position in this case now. Let me use 1 hour. And then let's say, okay, I think I have something that can work as a buy. So let's say we want to take a buy position at current market price from this level now, this mitigation point, this mitigation block down, price your mitigation block, and then you want to take a buy position, and then this is your stop loss at this level, 5.9, or let me use something that is playing out already instead. Let's go to 30 minutes. Okay. So let's say this is now volatility 25 on the 30 minutes. All right. The chart may be a bit different from what you have on TradingView, and that's why when you're making your analysis, just stick strictly to what TradingView is giving you. That's the original chart. I'm sorry, what the derivative TradingView is giving you. That's your original chart feed. Okay. So now let's say for something like this, now you want to take a sell position from this level. Let's say this particular level now. Price has mitigated. Let's assume that this is what's your valid entry. Price has mitigated the entry. Then you want to take a sell position from that level. All right. Now, when you come to minimum lot size, which in this case now you've established that the minimum lot size is what, 0.005. All right. So you come here now and then you open a position with what, with 0.005. Let's say 0.005. And then, market price. Now you're going to be using market execution because of the fee that may not be using limits. All right. For those of you waiting for candlestick confirmations before you enter, it means that when the candlestick closes, that is when you come to your MT5 to open your positions. So let's say in a case like this now, you've opened the position on current market price, which is what with the minimum lot size, and then let's say was selling by market. All right. Something just like this. Now let's use a stop loss. Let me say on this particular trade now, I want to risk like $5 at stop loss. And then I go to the chart. Let me set my stop loss somewhere high. Coming. Let's say we want our stop loss to be at a level like this now. This level. Now this is around $10. Sorry, stop loss. Now this is stop loss. You can see stop loss reading SL 15.35 USD. So as I'm moving this particular cursor now, any level I stop it at, that you see the amount I will be losing at that level. So in this case now we have SL 10.68. If I'm going to be setting my 2181.83, I'll be losing what 10.68 as at stop loss. And then my initial goal is to lose only $5 on this setup. Let's say now I'll go to my MT5 and set 602151 as my stop loss. So come with me. I'll come here, modify 60. Is it 61? I'll be 2145. Let me check this. All right. Now for something like this, now you realize that okay, at stop loss, we're going to be losing what? We're going to be losing minus $2.83. No, let me increase that. I need something like $10 or above $5. All right. So let's say now at 60.3653, we're going to be losing what? $10. All right. So let me modify that. 60.3653. Okay. So modify position. We're doing 60.3653. Dot tweet. All right. So coming back to this MT5, you realize that okay, as stop loss, we're going to be losing what? 10.43. Let's say this was your initial analysis, and then using that analysis, that if you set the stop loss that you had on your derivative trading view with the minimum lot size on just one position, no starting point yet, that you're going to be losing what? $10.42. But then your intent is to lose only $5 on that setup. What do? You come to MT5. Now the thing is that people don't know, but on MT5, especially when it comes to, you can actually trade below the minimum lot sizes. You can open positions below the minimum lot sizes. For something just like this now, you can come here and then you do what you say, close position. And then what you do, you're closing 0.025 or you're closing 0.02. All right. Now, if it's that to close 0.02, which is half of your, since 0.05 is giving you about, what do they call it? About $10 loss. Closing of 0.02, just like this. Let me see. It works. So 0.01. 0.00 coming. This is 0.05. So let's see 0.0 if it works on VIX 25. So close position. Let's close like 0.01 is not working here. Let me see. 0.04 doesn't work as well. Okay, let me try another pair with a whole number lot size. Like let's say this one now, for volatility 100, we have 0.5 as the minimum lot size. All right, so let me use volatility 100 now. You come here and you go to charts just like this. So let volatility 100 at current market price. You have your position now. Minimum lot size is 0.5, and then you open a position just like this one. Okay, and then it's open. Now it's open just like this. All right, and then let's say at stop loss, you're going to be losing. Let's say you want to set your stop loss at which point? Let's say you want to set your stop loss at at 0 point. Okay, it has to be something above your $10 loss. Okay, let's say your stop loss is going to be set at 1570 dot. Okay, 1570.19, just like this. You have your stop loss set already for that you've gotten from your analysis. But then you realize that, oh, on this particular pair, my stop loss from my derivative trading view says what, $10, but then I want to lose only $5 at stop loss. Now, how do you do it? You go to your chart and then you do what? You click on close position, and then you're going to close what, 0.25, just like this. Now you realize that Abi Deriv stopped this thing. Let me see. You're supposed to be able to close some of your positions. Okay, let me see. If it doesn't work, then it probably means that it has stopped working on there. Usually you would be able to close some of your positions, leaving you with, yeah, apparently that stopped working. All right, if not, you would have been able to close some of your positions. Let me see. Let me try it once more with 0.4 or 0.1. Apparently, it has stopped working. But then usually you would have been able to close some of the positions, like if you're using the 0.5 minimum lot size and then you close position, you could actually close like 0.25, and then you see here your position is saying what, 0.25 as your position lot size, and then your risks will be reduced by half as well, since reducing the lot size has reduced what's the entire risk. But I think these are stopped because it was more like something that was working earlier. Maybe they've noticed the glitch, and then now you can't close below the minimum lot sizes. All right. Now this means that I'm just realizing this because I've not been like trading a really small account. But then this means that those of you that are trading small accounts now, you're going to have to be very careful about your lot sizes now. Whatever lot size you're using, that you cannot go below it. All right, like this case now, for this volatility 0.5, you can't go below 0.5. And if you have a setup like this, that's $10 risk, the $10 is your risk, and then you initially wanted to risk what, $5, it means that you would have to play confirmations instead. Confirmations give you a lower lot size because it's another block on another order block. All right, so that way I think you guys just have to be playing confirmations when you're having a risk high you can initially risk. All right, if this ever starts working again, then I'm going to inform you. I think those of you that know me very well on WhatsApp, I've made a video explaining this before. Only to find out now today that it no longer works on there if you cannot use lot sizes below the usual lot sizes. All right, but then back to stacking at specific points. Now, if you have something just like this, now you have 0.5 as let's say now you have a position opened with, let's say, 5, or let me use 2 lot size, just like this. You're selling them with what, 2 lot size, just like this now, and then you realize that, oh, using this 2 lot size, your stop loss is being set at let me use the same stop loss I used here, which is what, 1570.19. So in this case, I'm going to use 1585. All right. So let's say for something just like this now, you have your stop loss for the second position, giving you what, minus $72. All right. And let's say now this is an account that you want to risk only $30 on, or let's say you want to risk only $40 on. All you have to do is to split your lot size by 2. Since with 2 lot size, you're risking what, $72. If you want to risk only $40, all right, you just modify the lot size and reduce it by half. Do you understand? So you go to modify, and then you click on modify position. Sorry, you go to what, close position, and then you click on what, close one lot size. All right, just like this, and then you click on what, close. When you go back to that place, you can see that now the lot size has modified to what? The lot size has modified to what? To 1, and you realize that at stop loss now, you're no longer losing 72, you're losing what? 36. So if at any point you open a trade, this does not work on minimum lot size now, because I just checked it now. You guys will me when I checked. It doesn't work on minimum lot size now. But then if at any point you open a trade with every other lot size except the minimum lot size, and you think that okay, this particular setup that you just opened now, it's more than your risk, and you want to mitigate the risk, all you have to do is what, to split the lot size until it gets to what you want. At 5 lot size, you're risking what, $100, and then you want to lose only $20. All you have to do is to what, modify the lot size to what, only 1, meaning you close 4 and leave what, 1. Now that one is going to be what, you're going to be losing just $20. That is how you open positions at entry. If you're stacking as well, all right, if you have a position running, let me say I want to stack at entry now. Let's say I want to enter a sell position now with 0.5, and then I come here, 0.5, open my first position, 0.5, open my second position, 0.5, I open what, my third position. Now in a case like this, on 0.5, 0.5, 0.5, I have 3 positions running. The first thing that I'm going to do now is go to my maybe modify my position, and I check, oh, this 0.5 with 3 positions running now, and my stop loss set, how much am I going to be losing on one of them? Now if on one of them I'm losing probably, let's say $10, all right, and I have 3 positions opened at that level, which means that at stop loss I'm going to be losing how much? If I'm losing $10 and I have 3 positions open on that level, it means I'm going to be losing what, $30 on that leg. In next buy, I want to lose only $20 on that particular leg. What do? You just go and then you click on one of them and you do what? You close position. All right, almost immediately. So this time around, you have what, only 2 positions opened. So whenever you're stacking, you're going to be using 1 position multiplied by the number of positions opened on that level. Do you understand? So if I have 3 positions opened at this level, and I check the risks for one of them, because you know when you see people stacking up to like 20 positions, they cannot be setting stop loss, individual take profit for the 20 of them. All right, and that is the advantage that opening a bigger lot size has over people that would prefer to stack with minimum lot sizes, just like that. But then if you go to your MT5 now, and then you're stacking at entry, and you're stacking with probably minimum lot size on 3 particular trades, just like this, and then you realize that the 3 of them now, you're going to be losing like say $30, meaning that on one of that was opened at that level, you just set the stop loss and you take profit for one of them. So we realize that okay, for one of them now, I'm losing $10. Then you multiply it by the number of positions opened on that level. That is how you find out your risk for stacked positions, because you probably cannot do it when it's all together. You cannot start setting stop loss for 100 different setups. All right. So you just go to one of them, check the stop loss level for that one of them, and then what do? You multiply it by the number of positions open at that level, which means that even if I have another position now, let's say price has now dumped to like 1530, and then I'm already in profit. All right, and then I want to stack more positions at that level. It means that now when I stack those positions at that engulfing, wherever I'm using as my stop loss that is protecting the engulfing, all right, as price now does what? As price gets to that level of that engulfing, and then price has mitigated, price is already selling, all right, the number of positions stacked at that level, let's say I have like 6 positions stacked at that level, and then I set the stop loss and they take profit for one of the positions. What I mean by one of the positions is like one of this now. I come here, I modify position, I set the stop loss, I set towards the take profit as well. When I'm done doing that and I realize that okay, at stop loss now, I'm going to be losing how much? I'm going to be losing $15 on one of it. And then I have only $50 to reach that level, and I have 5 positions opened. If you go to your calculator app, you realize that 5 positions times $15 is what, 75. So which means that if I have only $50 to lose at that particular entry, what do? I think I'll have only 3 positions opened. No, only 4 positions. 4 positions should be like $60. So only 3 positions opened at that level, which means that I'm going to what, close 2 positions. Do you understand? So you're going to be, when you're stacking, you're going to be cautious of your risk too. Just tap on one of the positions open at that level. If you're stacking with a very huge lot size, you open minimal lot sizes. You open one of the positions opened at that level. You set the stop loss and your take profit target, and then you multiply whatever you're doing there with the number of positions opened at that particular level. You're dealing level by level. The first level is what, your entry level. The second level is what, your next engulfing or your next stacking point. The third level is what your next stacking point as well. All right, that's if you're opening minimally. But then this does not concern you if at like entry you're opening what's just one position. The next stacking point is one position. The next stacking point was one position. But if at entry you're opening like 5 positions on a lower lot size, next stacking point is like 5-6 positions on a lower lot size. That is what I'm talking about. All you have to do is to what? Use one of them and then multiply by the number of positions opened at that level. That way you're going to what? Get your risk, and then you're going to know, okay, I think this is going to cost me more than I can afford to lose. And then what do? You now close positions at that level. Or if this is not up to what I want to lose, what do? You open what? You open more positions. If you calculate the number, let's say now I have 2 positions opened at the level of 1547 as entry. And let's say now for the 2 of them now, I set my stop loss. Let's say stop loss. Let me delete the stop loss position here so that it doesn't get too much. And then I'll delete the one here as well now. So let's say now I want to set my stop loss to somewhere here, which is going to be 1562, or let's say 1563. All right, so I come here, I modify position to 1563, just like this. All right, and then I open to this. But now I have 2 positions of the level of what? 1547. All right, and then I've set my stop loss for one of them, and I come here. Now the stop loss has revealed that I'm going to be losing what? $7.7. Let's say in a case whereby I want to lose like $50 on this particular level, and I come here, one position says that what I'm losing just what? $7, and I check, I open 2 positions at that level, which means that I'm losing what? $14 on this particular stacking point, which is not up to what I want to lose. What do? You now open what? More positions. Do you understand? So you're treating this stacking point for the fact that there are too many trades open at that level for people that will be stacking like more positions and not increase lot sizes. Since there are too many trades open at that level, all you have to do is to what? Pick one of them, and then you set the stop loss and the take profit for that one. And then what now do? You now use that particular one to buy the number of positions open at the level of 1547. It's still the same thing I'm going to do. What do? I multiply by the number of positions open there. I just set the stop loss at for 1 and then multiply by the number of positions open there. That is if you're stacking. If you're not stacking, all you have to do is what? Open your MT5. You've seen your confirmation. You open a trade setup, right? You open your setup with the lot size. Let's say now for this particular one lot size now, for this particular one now, you're going to be losing $7. If you are comfortable losing $7 on the setup, all you have to do is to do what? Open your lot size, set your stop loss and your take profit target, and that's all. But if you're going to be stacking, it now depends if you're stacking with a big lot size and smaller position in 0.5, 0.5, 0.5, and 1. All they will do is towards to 2.5. All right, somebody that opens 2.5 and somebody that opens this number of positions, this lot size is now they will total to what? 2.5. It's the same thing. All right, the only thing difference between stacking with positions opened and stacking with just a specific lot size is the fact that when somebody wants to close positions, right? If they want to take partials, they know that okay, all I have to, if I close this one, I'm going to be closing with $2.45. If I close this one, I'm going to be closing with $6. So what they have to do is just what? To type and close. That's all. That's the only difference. If not, it's the same thing to stack with multiple positions opened and then one position open, so long as they total the same lot size and they are opened on at the same level, then there's no difference between the both of them. All right, so you're the one that's going to check out what works for you better. All right, and then you're going to tweak it in a way that it works for you, and that's how you come up with your own trading strategy. Okay, now I don't know if there's for the one now below the minimum lot size, that's the only problem I'm having now, because before this used to work very efficiently, that even if you have yes
What
yeah, I
you were
can hear
trying
you.
to teach, you were trying to teach earlier. Someone just check
What did you say?
your Telegram. I sent a message. what you say that wasn't working, that it seems like it's no longer working, it's still working. Someone sent me a message, so I forwarded it to your Telegram. Just check it out.
Uh, okay. Listen. Okay, so somebody just showed me another method. Let's check that instead. All right. So in a case whereby you want to open 0.5 lot size for this particular setup now, let's use 0.5 lot size. All right, for minimum lot size now. Let's say at 0.5 lot size, you're losing like how much? Okay, for this particular one now, at 0.5 you're losing $7. All right, and you're not comfortable losing $7. You want to lose like $10 and all of that. All you have to do is to what, come here and then you open 0.6 instead. All right, you open 0.6 and then you sell by market. Now at 0.6 now, you come to this 0.6, you tap on it and then you click on modify position and then you're closing with 0.5. So the issue now that this has is the fact that you cannot close is the fact that you cannot close below the minimum lot size. All right, but then you can have a trade running below minimum lot size. So for something just like this now, you realize that okay, when you close 0.5 you have what, 0.1 warning. All right, so in a case like this, you realize that if you're losing $7 at 0.5, at 0.1 you're losing like around $1 or $1.5. I think that's still very interesting. That's better as well. So that's something else that you can try. If you want to, if you check and the minimum loss size is 0.5 and you want to, and at 0.5 you're losing like $7, right? All you have to do is to what, open 0.6 and leave 0.1 running, just like that. Or you can open 0.7 and leave 0.2 running in a way that it's still your VIX. So that way, even if VIX 100 minimum lot size is 0.5, you can have what, 0.1 still running, which is below the minimum lot size. All right, so let me show practically now. Let's say we have a trade setup now that you open with, let's say, one lot size. No, that's too much. Let's say 0.5 here. Now for the stop loss, we're going to set stop loss at let me take it to like this level, which is 1578.67. all right, so 1578.67, modify position 1578.67, modify. Now if you check at stop loss for this particular position opened at this particular starting point, you realize that at stop loss we're losing what, how much? We're losing $18 if you open with what, $0.5, and then you want to lose like, let's say just $10 instead of that $18. You want to lose like below $10. That's what you can afford to lose, right? All you have to do is to what, instead of opening with 0.5 now, which is below minimum lot size, you can what, at 0.2 on this level, you'll be losing what, how much? At 0.2 you'll be losing barely around below that $10, because if $0.5 is what, about $18, it means that 0.2 will be what, just around $10. Okay, so closing this particular position now, instead of 0.5 you'd be opening what, you'd be opening 0.7. all right, so here you have $0.7 open, sell by markets, and then you now, when you open the position, you come here to now what, modify position, sorry, close position, and then you're closing what, 0.5, so that you can have what, 0.2 running. All right, still same stop loss. You realize that at 0.2 now you have what, your stop loss at 1563. all right, so let me set stop loss at what, 1563. 1563 for stop loss. I'm going to delete the stop loss set from this one, modify position. Maybe was it this one? Yeah, okay, so now the stop loss is set for this one at 0.2. But when you come here, you realize that instead of $7 now, you're losing what, just $3.86 at that particular level. All right, so that way you just set a stop loss, a lot size higher than the minimum lot size. all right, so that you can now close the minimum lot size out, and then you can have 0.2 and 0.1 for a pair like this now. All right. So if at 0.5 you're losing like $10, at 0.5 it will be what, 5 times less the risk, depending on how your this thing is, on how your risk tolerance is and your account balance. You can decide to do this. This is just for people with small account sizes. For people with bigger account sizes, you have no problem going through all of this stress. I don't think $100 you need to be doing all of this. This is for people that are trading $5, $10, and the rest of that. All right, below $10, with $15 and all of this, you're good. You know, you don't need to be cutting any of this. All right. So if you have any questions, as usual, you can always ask questions on the question subtopic, and I'll make sure to go through it and revise everything. All right. So I think this is I really want to send the recording of this particular class to the recording group. Okay. So I'll send the recording, and then you guys will see it in two parts. The first part for what happened first before the recording issue came in, and then the second for this particular one. All right. So I'll see you guys again tomorrow. Most likely we're going to be having a class tomorrow by 9 p.m. So until then, continue what you've been doing, studying, checking out trades. I think even the setup that we revised yesterday's class, was it something JPY, I've forgotten. You realize that it has hit take profit target already. Both the major setup and then the confirmation, they've both hit take profit targets. All right. So just keep on looking out for these type A's, type B's, both on synthetics, on currency pairs. All right. So I'll see you guys again tomorrow by 9 p.m. Until then, do take care of yourselves.